joining is Jean-François Perrault, Senior Vice President and Chief Economist at Scotiabank. That's the big question, Jean-François. What's the answer?
Well, listen, I mean, clearly this inflation report confirms the view that rate cuts are coming. There's still some uncertainty about when those might come. Is it going to be June, July, or a little bit later on? The faster inflation comes down, the more it's suggested that rate cuts might come a little bit sooner rather than later. So the debate really is at this point, I think, is it a June cut or a July cut? We're thinking July seems more reasonable still at this point because there is still a tremendous amount of information to come that the Bank of Canada needs to digest in order to, from our perspective, have the confidence it needs to cut in June. But clearly, like this is a very comforting inflation report. Virtually all measures of inflation have come down. These very important median trend measures of inflation that the Bank of Canada focuses on are slowing quite significantly. You see that in the year-over-year numbers. You see that on the month-over-month numbers. They're below 2%. So there's a lot to take comfort from in this report.
So why not just say June is a green light? What more do you or more reasonably the Bank of Canada need to see?
So I think there's a few things. I mean, we know, for instance, that the economy is still a little bit stronger than what we'd expected. We had an employment report a couple of weeks ago, 90,000 jobs created. It's very strong. A moderation in wage growth. The wage growth remains still elevated. The tracking for, say, hours worked in the second quarter, so an indication of where GDP might grow, suggests that we're looking at another strong quarter so far in Q2, even though there's very limited amounts of information. So you got to keep in mind that, as the Bank of Canada thinks about the inflation outlook, it must consider the growth outlook. So if you're revising your growth forecast up, which might be the case, you've got to set that against some of the progress you've seen on inflation. So there's some big kind of growth indicators to come between now and June, and of course even more so between now and July, that I think will allow the Bank of Canada to have a more complete picture of inflation dynamics and the trade-off or the potential consequences on the growth side from policy action. So those are really important. Then of course there's what's going on down south with the Federal Reserve. Mm-hmm. Where they will be meeting there. It's very clear that the Fed is in no rush to cut interest rates. We'll have a meeting between now and July where we'll have some more indication of how the Fed thinks. And at the limit that, not that the Bank of Canada is going to set policy on the basis of what it expects the U.S. to do, but that might help, provide a little bit more comfort from the Bank of Canada perspective that, they know the track, that they have a better sense of where the track is, the Fed is tracking. And so that pushes us marginally more to July relative to June. But, I think it's a close call. Then, of course, we have to keep in mind that the governor, as recently as a couple of weeks, maybe 3 weeks ago now, 2-3 weeks ago, indicated that he believed he needed many more months of data in order to, make the call as to whether or not they're ready to cut. And, a month of data relative to the last time around is not, what we consider to be many more months of data. So there's all these little kind of bits of information that suggest June is still a little bit too early for the first cut.
Even if we get that one rate cut, whether it's June, whether it's July, to your point, how many do you expect after that?
Well, this is where it gets interesting. I mean, we think there are 3 rate cuts this year. We have originally a September rate cut. We're probably going to move that up to July. The question is, I think, is if the Bank of Canada feels compelled to move in June, that is to say, it either is really comforted by the inflation data or it sees something on the growth side that worries it. If there is high conviction that they move in June, despite the fact that the governor said he needed many months of information to confirm when the right time is to cut, then maybe you start to think about they need to do more than 3 rate cuts this year. Because of course the earlier they go, the more there is perhaps a sense that they need to do kind of a more aggressive set of cuts to follow up on that. So our sense is if they go in June, then you have markets pricing in a bit more rate cuts for the remainder of the year than currently priced in.
How does this all fall to the housing sector? Are you worried about the risk of reignite, what even one rate cut does in terms of reigniting it versus, I talk to builders all the time and they're telling me one of the reasons they're not building is because of costs and because of high interest rates.
Of course, and that's been one of the key questions for the Bank of Canada. We know growth has been stronger than expected. We know inflation's coming in nicely, but there is this intersection between lower rates and the expectation and realization of lower rates and how that feeds into the housing market, which is, as you very well know, deeply undersupplied. So there is absolutely an expectation that when rates start to come down, that you see a pickup in the housing market. Not necessarily in the construction side of things, because costs remain elevated, but certainly you see housing demand from kind of the household perspective pick up pretty significantly once you kind of get that confidence in that rates are in fact going to go down and mortgage rates are going to be cheaper. So there is some concern there. And of course, that's good for homeowners and potential mortgage borrowers. But it is a concern from the Bank of Canada perspective because, of course, if you get a very rapid rebound on the housing market, then of course that adds to growth, and that makes kind of the inflation challenge perhaps a little bit more difficult to manage. Which is another reason why we think a little bit later than June would be kind of optimal for the Bank of Canada to move on.